Hello, good morning, everyone. Welcome to today's webinar. My name is Jeanette Pinkosa, and I will be your moderator. We all know that the world is evolving. Countries are equally evolving. This means that the traditional way of doing things are being replaced by new innovative ways or systems. And every country, for them to be progressive in growth and development, there is the need that its governments and the policymakers continuously review and amend the laws, the rules, and the regulations of the country. And so today we are happy to take you through this webinar whilst we walk you through the Nigerian tax reform, which has already been in effect since January 2026. Before we go into it, I would like to tell you a bit about Famous Advisory. Famous Advisory is a business consulting firm, officially and formally incorporated in Ghana. And this is our 15 years in operation in Ghana. We provide services in areas such as business regulatory compliance that covers services from business registration, immigration, and any other regulatory agency requirements that is needed for your specific sector of operation. Famous Advisory can help you get all those regulatory compliances to help you operate smoothly within the country, Ghana. Famous Advisory equally provides services in market research. And with market research, if you are a company seeking to enter into any market, you want to check the market to see whether you have competitors, what your competitors are offering, what they are doing. You need market insight, and you want a trusted company to do a research for you. Famous Advisory is one of the companies, or it will be your option for us to give you the kind of market insights you need to know to make your decision in incorporating your business in Nigeria or Ghana. Also, we provide services in tax and accounting, where we help companies in monthly filings, preparation of accounts at the end of the year, and all of that. We have a department that handles legal services as well. So if you are in business and you need any assistance in any legal compliance aspect, you can reach out to Famous Advisory and we'll be glad to assist you. We also have service in human resource. So if you are new, or even if you are an existing company, you want to outsource your recruitment services, training, and any other HR services, you could equally reach out to Famous Advisory. With this said, I can tell you that Famous Advisory is a one-stop shop where you can get all the things pertaining regulatory compliances in smoothly running your business. To say this also, I would like to mention that Famous Advisory over the period have grown, and we have our Nigeria office fully operational and providing the same services as I mentioned. We are also in operation fully in Côte d'Ivoire, where we are providing these services. Even though we are not presently present in countries that I'm going to mention, we equally provide services there. Kenya, Cameroon, Senegal, Sierra Leone, and Guinea. If you need assistance in any of these areas, including Benin, you could equally reach out to Famous Advisory. Now, as I've already mentioned, a country can only develop when its taxes, when the laws regarding its operations are being reviewed and amended. And so today we are glad to have you on this webinar as we are going to dive into the new tax laws of Nigeria. And then also, if you have any questions, if you have any question whatsoever regarding the presentation that we are going to have, You are free to use the Q&A section or the chat box. Drop your question in there. After the presentation, we are going to answer each and every question. Thank you very much and stay tuned.
Famous Advisory Limited is a consulting firm established in 2013 based in Accra, Ghana, where we provide 3 core services. Number 1 being regulatory compliance, 2 is market research, and trade development. Our regulatory compliance division is a division where we basically take care of a company that is expanding here into Ghana. We provide core services from company formation, immigration-related services, company secretariat, as well as other key licenses that are required for every new business that is expanding into Ghana. Here at Fairmont, what we've sought to do basically bring one with all the key services that you need. And really, our strength and our unique selling proposition is the fact that with us, you don't have to move from agency to agency to get your issue sorted. With us, you're able to have subject matter expert who can speak to tax, who can speak to immigration, who can speak to company registration, and will take care of your company and provide you solutions that help you have the peace of mind to work and to start your business here in Ghana.
So our research and trade development services focuses on providing insights as well as market analysis for existing companies as well as companies that are looking to invest in Ghana. For trade development, we focus on connecting markets. So if you're a Ghanaian company looking for a potential partner outside the country, we do assist in securing those partnerships. If you're a foreign company looking for a local company to partner, we do provide due diligence services, among others, and connect you to those companies. We don't only focus on foreign companies that are looking to invest in Ghana, we also focus on Ghanaian companies that are looking to expand and better understand the market. We have a host of industry experts that help you understand that.
We work for a number of brands in Ghana as well as global. We work for brands like ABSA, formerly Barclays Bank. We work for International SOS. We work for Honda. We work for Jetro and a whole host of other firms and clients in Ghana and across the globe. So we are happy to extend our services to you as well and to serve you. Our name is Fairmont, which simply means reliable in Latin, and we are simply inspired to deliver value.
Welcome back, and thank you for staying tuned. This webinar promises to be very inspirational and very educative. Don't forget to use the chat box for all your questions, and we will address them after the presentation. Today we have here our presenter by name Kingsley Odotochukwu. He's going to take us through the new tax reform for Nigeria, and then we would attend to all questions. Please make sure to use the Q&A. As the presentation is going on, I would like to also ask for you to share your location with us. Anybody joining us, let's know where you are joining us from so that we can acknowledge you. Thank you very much. And I leave it to Kingsley Odotochukwu to take the presentation.
Okay. Thank you, Jen, for the introduction. And thank you, everyone, for joining. Good morning, good afternoon, good evening, depending on the location you're joining us from. My name is Tochukwu Kingsley Odo, and I'm a tax and accounting executive at Fairmont Advisory Nigeria. I'll be taking you through this presentation on Nigeria tax reform, that is the NTA 2025. So I will also be looking at how you can navigate tax compliance in this current tax regime. So our table of contents, we have the introduction, where we're going to be introducing the topic, and we also have the objectives of the webinar and things you're going to get at the end of the webinar. Then we have the overview of the Nigeria tax reform. Then we're also going to explain to you the 4 pillars of the reform. Then we take you through the changes that happened in company income tax personal income tax, value added tax, and capital gain tax, and how these changes are going to affect your business. Then we also discuss knowledge-based companies and individuals and the changes that affect them as well. Then we are also going to be giving you compliance tips and things you need to do. Then we have the Q&A session. So, as we all know, as the country grows and evolves, the laws that are guiding them, right, usually need to change so that there can be an alignment in the things that are happening in the country, right? So, and the major tax laws that have been governing Nigeria or Nigeria that have been using all this while have been the Company Income Tax Act and the Personal Income Tax Act of 2004. And it has been discovered that these tax laws are currently outdated as they are no longer taking care of things that are happening in country in Nigeria today. So, and that's have actually necessitated the need for a reform. So the tax reform was actually carried out to modernize, simplify, and also unify the tax system in order to drive economic growth, increase compliance, and boost revenue generation for Nigerians. So throughout this webinar, we are going to be looking at the principles of the tax reform. Then we're also going to be discussing the impacts on individuals and businesses, and also share tips on how you can navigate tax compliance and ensure effective tax planning. So at the end of this webinar, participants will gain a comprehensive understanding of the principles and changes introduced by the tax reform, and also develop practical skills to effectively navigate tax compliance in their personal lives and also in their businesses. So the major thing that happened in the tax reform is that there is a consolidation of the tax laws. Like we know, the tax laws that have been guiding Nigerians are all separate. They were all existing separately. For instance, the company income tax was a separate law on its own. The personal income tax was a separate law. The Value Added Tax Act was a separate law on its own. So that's have actually made it very complex and difficult for people to go through the tax laws and understand what they need to do, right? And that's the major problem that the new tax law tried to solve. So the new tax law actually consolidates all these separate tax laws into a single law, right? In the sense that you can pick up that particular Nigerian Tax Act and you'll be able to cover all the major taxes that you're supposed to comply with. There is also the strategic objective which they want to achieve, which the policymakers want to achieve, in the sense that they want to bring a lot of people into the tax nets, right? Because over the years, the global oil price have dropped, and you know Nigeria is one of the major oil producing countries in Nigeria, and have heavily been dependent on oil revenue. So, but because of the drop in price, in global oil price, policymakers have to look for alternatives to secure resources to run the country. And that have necessitated the need for them to bring a lot of people that were not initially captured into the tax nets. So there is also the need for, so aside the first two objectives that they need to achieve, there is also the need for the Nigerian tax system to align with what is obtained in every other place of the world or in every other part of the world, right? Because countries all over the world are becoming more, they are interacting more, right? So, and you have to align your tax system to being in alignment with other tax systems, right? Then there is also the objective of developing several sectors like the gaming sector, the mining sector, the financial service sector, right? So the Nigerian Tax Act also included some reforms that are going to specifically impact these important sectors of the economy. Then the major four pillars of the Nigerian Tax Act are four, right? So what we regard as Nigerian Tax Act or Nigerian tax reform is made up of four pillars, which are actually separate, four separate tax laws. So, and the number one of them is the Nigerian Tax Act, which primarily consolidates the separate tax laws that were existing independently before. Then you also have the Nigerian Tax Administration Act, which focuses on the administration, on how taxes are administered, the registration process, the filing process, and the compliance requirements, right? Then you also have the Nigerian Revenue Service Establishment Act, which establishes a new tax authority, right? Before 2026, the tax authority or the major tax authority that we had was Federal Inland Revenue Service, right? But in 2026, Federal Inland Revenue Service is no longer in existence. They have been replaced by the Nigerian Revenue Service, right? So this particular act is the major act that establishes the Nigerian Revenue Service and also gives it the powers, the mandates, and the funding structure that they're going to run with. Then we also have the Joint Revenue Board Establishment Act, which creates a framework for the harmonization between federal and state tax authorities so that there can be a reduction in multiple taxes. So the intention of this Joint Revenue Board is to reduce a situation whereby the states will be taxing individuals and businesses, and the federation is also taxing individuals and businesses with a particular tax, right? So that's the major objective that it wants to achieve. They completely want to avoid that. So looking at the changes that happened, we are going to be starting with the changes that happened in the company income tax. And the major change that happened is reclassification of companies. Initially, the previous tax laws we had three classes of businesses. We had small business, medium-sized business, and also big businesses, right? But the current tax law have changed that completely in the sense that it's removed medium-sized companies, and we have just two categories of companies: small size and a big size. So for you to be recognized as a small company, previously the turnover you have to meet, or the turnover you will have to have, is going to be 25 million naira and below. But that has been redefined by the current tax law. So for you to be classified as a small company currently, you have to meet two criteria, which is the turnover criteria and the fixed assets criteria. You have to not exceed an annual turnover of 100 million, and also your fixed assets must be less than 250 million. So even if you are making a turnover of over 100 million and your fixed assets is less than 250 million, you do not actually meet the criteria to be classified as a big company, right? And regarding the tax rate that applies to small companies, there was no change in the tax rates. So if you are a small business, you are completely exempted from paying tax. And this was actually the same with what we had before. So initially, if you're a small business, you are exempted from tax completely. And the new law actually retains that position, right? Then for large companies, the law also maintains the tax rate for large companies, which is 30% for large companies. Then for medium companies, the new law completely exploits medium companies. So there is nothing like medium company in Nigeria today. So you are either a big company or a small company. So, but for professional service companies, right? Currently, all the professional service companies are regarded as large companies, irrespective or regardless of them meeting the turnover criteria or the fixed assets criteria. So professional service companies are taxed at 30%. So they are automatically classified as large companies. Then it's important to note that the 0% or the 30% that is applied is not on revenue, is on your taxable profits, right? And for you to obtain your taxable profits, you have to make some deductions from your revenue, right? You have to make some deductions like cost of sales and other expenses. So, and the law or the tax law provides some guidelines or some criteria for you to reduce or for you to for an expenses to be allowed for tax purpose, right? So for an expenses to be allowed, the expenses must have been used wholly and exclusively in the generation of the revenue that is to be taxed, in the sense that you cannot use an expenses that you incurred for your personal in your personal life, and you deduct it from your business revenue, right? So that's not going to be allowed. And also, as an individual, you are not allowed to deduct another person's expenses, right, on your income when filing for tax. Then for foreign exchange expenses, the major change that happened in expenses that are incurred in foreign currency is that the exchange rate that you're going to use, right, when adding the expenses is going to, the only exchange rate that is allowed is the central bank or the CBN rates, right? But initially, the exchange rate that was allowed is the black market rate, right? Then for capital allowance, the new tax law completely remove initial allowance, right? So, and also changed all the allowances to straight line to it's completely changed the allowance that you are going to have in your qualifying capital assets. So in the sense that the only allowance that is allowed is the one that is achieved using the straight line method, right? Then, and for an asset to qualify for capital allowance, then you have to have paid the tax or the VAT and the import duties that are incurred or that are charged on that particular asset. Then the new tax law also removed what we regard as the NMAC taxes, like the education tax, which is 2.5%, the NISDA levy, which is 1.1% of the profit before tax, then the police trust fund, the National Agency for Science and Technology, Science and Engineering Infrastructure, rather, right? So the new tax law completely removes these sets of taxes and replaced them with a 4% development levy. So this 4% development levy is a single levy that's charged on companies to fund national development initiatives such as education, technology and innovation, and other infrastructures, right? Then for the filing deadline remains the same. There was no change in the filing deadline. However, for the penalties for non-filing, there has been an increment in the penalties for non-filing. In the old tax law, the penalty for non-filing in the first month is 50,000 naira, right? But in the new tax law, the penalty for non-filing in the first month is 100 have been increased. It has been doubled to 100,000 naira, right? Then for the subsequent months, initially it was 25,000, but that has been doubled also to 50,000 naira, right? Then moving forward to the laws that affect individuals, which is the personal income tax, right? There has been a change in the tax band, right? And there was also a change in the tax rate that is applied to individuals, right? In the new tax law, the tax band ranges from 800,000 to 50 million, right? While in the old tax band, we had from 300,000 to 3.2 million. And there's also changes in the tax rate that is applied. So if you're making 800,000, then you're completely exempted from paying personal income tax, right? But if you're making over 50 million, then you are going to be paying 25% of your taxable income after tax, right? And this is completely different from what we had before. And if you can see my screen, you see that we have two tax tables. One is the table that contains the tax band, the new tax band and the new tax rates, while the second one is the table that contains the old tax band and the old tax rates, right? Then for non-resident or for resident Nigerians, those are the people that are living in Nigeria. So all your income, whether they are generated in Nigeria or not, because there are some people that are in Nigeria, but they're making money from other parts of the world. So if you're in Nigeria and you're making money from other parts of the world, the whole income is taxable. But if you are not in Nigeria, or that's if you're living outside Nigeria, then the only income that is taxed is going to be the income that is generated from Nigeria, right? Then there is also an inclusion of items like digital assets, like cryptocurrency, prizes, honoraria, and grants. So these items have been added to, they're actually going to be added to your revenue, right? So if you're making, or if you're giving a prize, or if you're giving an honoraria or a grant, all going to be added to the items that are going to be taxed. Then the individuals also have access to some allowances. So the major allowance that are available to individuals is the rent relief, which is at the 20% of the annual rent paid and is subject to a maximum of 500,000 naira, right? Then they also have a relief on the pension they contribute, the National Housing Fund, the National Health Insurance Scheme contributions. So if you made any of these statutory deductions, then it's an allowable expenses for tax purpose. Then if you paid interest on mortgage in a house that you are occupying, then is an allowable expenses for tax purpose. Then if you made any payments for life insurance premium, then it's also an allowable expenses. Then if you had a loss of office and you are giving compensation for loss of office, then you are allowed this particular compensation is not taxable. But if the amount is over 50 million, then it's taxable. The additional amount that is in excess of 50 million is going to be taxed. In the old tax law, the threshold was actually 10 million naira, but that has been increased to 50 million naira in the current tax law. Then if you are getting some benefits in kind, like if you are occupying a rent-free accommodation that is given to you by your employer or that is given to you by someone else, then you're going to be paying 20% of the gross income that is supposed to be accrued to that rent, or that's the rent that is supposed to be generated by that particular property. Then you're going to be paying 20% of it as a tax. The consolidated relief allowance, which was in the old tax law, have been completely removed. Then on value added tax, there are some changes that happened in value added tax. Some items which were initially exempted from value added tax have now been reclassified, like items like non-oil exports, basic food items, medical and pharmaceutical equipment, education and energy resources. So the implication of this to your business is that if you incur any expenses on them, right, then you're going to claim input VAT or input VAT credits. So if you paid any VAT on them, then you should be able to claim a refund from government for them to pay you back some of the money that you incurred at VAT. But if the item is a completely exempted item, then there is no input VAT recoverable on them. And some of the items that are completely exempted are humanitarian goods, which are specifically used for humanitarian projects and relief efforts, assistive devices, which are specialized devices and equipment for people with disabilities, then expenses that are incurred in export processing zone and free trade zones, and also land and building. So land and building are not subject to VAT. Then for you to be able to recover VAT or for you to be able to claim your input VAT, you must have carried out what is known as fiscalization or e-invoicing. So this is the process of you integrating your system with the NRS or Nigerian Revenue Service Portal in such a way that if you are issuing an invoice or if you are recording a transaction in your accounting system, then the tax authority should be able to see whatever you have in your accounting system for them to be able to validate if it's true or not. Then you are also allowed to apply for VAT within 3 months, right? So you have to do your e-invoicing, then you request for VAT refund, then the tax authority is supposed to refund you within 30 months or 30 days of application. And this was not actually possible in the old tax law. And for you to get a refund in the old tax law is just as difficult as anything you can imagine. But the changes have actually made it possible for you to get the refund within 30 days of application. Then on capital gain tax, there are a number of changes as well. So as an individual, so initially the capital gain tax is at a flat rate of 10%, but that has completely changed to 30% for large companies. Then if you're a small company, then you are not allowed to pay capital gains tax. Then as an individual, the capital gain tax you are going to be charged is going to depend on the tax band that you fall in. Right? We discussed tax band initially. So when you made the capital gain, then the rate that is going to be applied to you will depend on the particular tax band that you fall into. Then there's also an expansion of scope of items that are chargeable for capital gains purpose. So initially, digital assets and virtual assets like cryptocurrencies and NFTs were not actually captured in the definition of chargeable assets, but they have actually been added in the new tax reform. Then there is also an increment in the threshold of relief that are available to individuals. So initially, if you made a sale or if you dispose your shares in the Nigerian capital markets and the disposal and you made a profit of less than 10 million, right? Or if the proceeds are less than 10 million, then you are exempted from paying capital gain tax. But that threshold has actually been increased to 150 million. So if you dispose your shares in Nigerian capital markets, and these shares must be the shares of a Nigerian company, right? It must be a share of Nigerian company. If you made some proceeds and is less than 150 million, then you are exempted from paying capital gain tax. But if it's over 150 million within 12 months, that's within 1 year, then the excess amount is going to be charged to capital gain tax. There is also a change in the computation or the method of computation, right? So rollover reliefs have been removed. Then where capital allowance were claimed, the gains is going to be equal to proceeds minus the tax written down value of the assets. But initially, the tax what is used is a historical cost instead of the tax written down value of the assets. Then for non-resident companies, they have actually been recognized more in the current tax law. So companies that are operating in other parts of the world, but they have a significant economic presence in Nigeria, are actually going to be taxed on the revenue or on the profit that they made from Nigeria. So if, for instance, companies like Netflix that have customers that are streaming from Nigeria, then the profit that they made from Nigerian customers are going to be taxed. Right? They're going to be taxed depending on the threshold they fall into. Then for non-resident individuals as well, like I've mentioned earlier, are going to be taxed on their revenue or on the revenue that they got from Nigeria alone. Then, what the compliance tips or things you should do to be able to navigate the compliance in the current tax regime. So one of the major things you need to do is to register for tax identification number, right? As an individual, even though there have been some changes that are made to the tax identification number registration, because the tax authority is actually trying to ensure that the tax identification number for every person is a kind of uniform. Because previously, each state have a tax identification number that they give to individuals that are residing in their states, right? But the Joint Revenue Board have actually made it possible for you to use your NIN, right, which is your national identification number, to serve as your tax identification number, right? So aside that, they also issue a Joint Revenue Tax Board tax ID, right, which is the tax ID that can be used in any part of the country. So this is completely different from the initial situation we had, where each state issues its own separate tax identification number to the individuals that are residing in their states. Then for companies, the Joint Revenue Board is also trying to ensure that companies use their CAC number, or what is known as their RC number, as their tax identification number. Even though this is still in process, but that's what they are trying to achieve in the future, right? The Nigerian Revenue Service is currently still issuing tax identification number, but they are trying to ensure that maybe when everything must have been implemented, then your CAC number should serve as your tax identification number. Then you are also advised to maintain proper records of the income and expenses that accrue to you in the course of your personal life or in the course of your business. So for businesses, you are advised to use accounting softwares to be able to do the proper classification of transactions that happen in your business. Then it's also important that you keep track of invoices and receipts, right? So if you incur any expenses or you make any transaction, it's important that you keep track of or you keep record, you find your invoice or the receipts that is given to you by the vendor, right? Because the tax authority does not actually listen to your claims like that's a incurred amount, even though they can see it in your bank statement, but they usually prefer you presenting a document that will substantiate that particular expenses, right? Then you're also advised to mark deadlines for tax filing on your calendar, right? So you mark important tax filing dates, like the 10th of the following month for filing of your personal income tax or payee, then 21st of the following month for your value added tax and withholding tax, then 6 months after accounting year, after the end of financial year for company income tax. So when you mark these important dates in your calendar, it will enable you to remember the filing dates and ensure that you do not miss the deadline. Then it's also important that you do the filing as that's when due, right? So it's not just marking the dates in your calendar, but also ensuring that you do the filing when you're supposed to do it. Then another major important issue or major important thing you need to do is to engage the service of a tax professional. This is because navigating tax compliance can be a challenging task, right? But because the tax consultants or the tax experts have actually done it over the years and have actually have a number of clients that they're handling, right? And because they are subject matter experts, they should be able to navigate it more easier than you doing the whole thing yourself. Then for large taxpayers, it's important that you ensure that you register or you integrate your system with the Nigerian Revenue Service portal, right? In such a way that they can be monitoring your transactions and your invoices as and when they happen. This is actually mandatory for all large taxpayers, right? So it's important to engage the service of a service integrator and also access points providers to integrate your ERPs and your accounting systems with the Nigerian Revenue Service systems. Then it's also important that you look out for updates in tax regulation. Just recently, the Nigeria Revenue Service made an update on withholding tax, where they stated that profits on short-term securities are going to be subject to withholding tax, right? So it's important you pay attention to the changes that's happened over time, right? Because if you don't pay attention, you might just be carrying out your transaction like you normally do, right? So for instance, you just be carrying out your transaction like you normally do, but because you listen to news and pay attention to the updates, it will enable you to make some decision that you will not normally do if you do not have access to the news that happens. Then, in conclusion, it's important that you take notes of these important changes, right? For companies, if you are a company or if you are running a company, then if you're running a small company, then you are not allowed to pay tax. Now you are completely exempted from paying company income tax. But for large companies, you are going to be paying 30% of your accessible profits as a tax. Then you're also mandated to pay 4% development levy, right? But if you are a multinational, then after all your taxes, there has to be like a minimum tax you are supposed to pay. So at the end of the day, they have to make a comparison of the tax you've paid with the minimum effective tax rate of 15%, right? Then if you're an individual, it's important that you look up for the tax band that you fall into, which is between 0% and 25%. So you take note of the tax band that you fall into and pay your tax accordingly. And for VAT, if you're a large company, then it's important that you register your company with, you integrate your system with the system of the Nigerian Revenue Service to enable them to monitor your transactions as they happen. Then for capital gain tax, the major change that happened is that the rates have been aligned to the company income tax rates. That's for if the person making the transaction is a company. But if it's an individual, then the rates have been aligned to the tax band and the tax rate for individuals. Then digital assets have also been added to the chargeable assets for capital gain purpose. Then the effective tax date or the effective date for this tax law is 1st January 2026, right? So the tax law was enacted in 2025, but the effective tax date is 1st January 2026. So I think
Okay, thank you very much, Kingsley, for this great detail and also educative explanation on the new tax laws. I am hopeful that everybody on this call or on this webinar has learned a lot today. There's a saying that education is a lifelong journey, which has no end. And so every now and then we need to update ourselves and also get to be a bit more updated on everything that is going on around us. So thank you for this information. And I believe that it will be of help to all of us on this webinar. Now, as I mentioned earlier, you are to make use of the Q&A section, and we'll give you just some few minutes, about a minute or two. If you have not yet put in your question, kindly do so. Then we'll come back to answer all the questions. Thank you very much and see you shortly.
At the very beginning, one thing stood out. Information wasn't always easy to find. Reliable data was limited, scattered, and often difficult to trust. Femo started as a research company, helping businesses to understand their markets, studying trends, providing clarity through data. Because before decisions are made, they must be good.
It's all June Black.
Compliance became our foundation, helping businesses operate with a structure, with governance, with confidence, not just to exist, but to operate the right way.
So we expanded into a robust tax and accounting department equipped with integrated solutions to drive growth at every stage of the process.
And so we strengthened our advisory depth with strategic legal services, providing governance frameworks, managing risks, and enhancing long-term value, not just to solve problems, but to prevent them, because strong businesses are built on strong legal foundations.
We saw local and talented founders with bold ideas, but overwhelmed by process. So we built Easy Start to simplify business registration, to remove barriers, and create opportunities. And that is why we created Frameworks Connect, a career development and recruitment platform which connects talent to real opportunities, where interns find the right roles, where employers discover brilliant minds, where training, coaching, and placement meet purpose, because a thriving future begins with connection. As our clients expanded beyond Ghana, we expanded with them, establishing our presence in Nigeria and Cote d'Ivoire, strengthening regional reach, delivering advisory across borders, and extending the framework standard to a wider market, because wishing does not stop at a boundary.
We've expanded within Ghana with the establishment of our Kumasi branch, deepening our national footprints, bringing our advisory services closer to businesses, and strengthening our presence where good is happening.
From Insight, we became an organization. From one office, we became many offices. From local impact to regional influence, we didn't just grow, we evolved over time. And with this, we are just getting started.
I believe that the presentation from Kingsley was a bit more detailed. So everybody has gotten the understanding that they need, because why will I be able to say so? Because we are not having a lot of questions coming from people. That means that you have done a very great job by giving more details and then bringing it to the level that everybody can understand you. However, these are the few questions we have, and we would want you to help people understand. So the question is, what is capital allowance? What of capital allowance on laptops or other work equipment like internet, power, etc.?
Okay.
So do we have any capital allowance on such equipment?
Yes, we actually have a capital allowance on laptops. Then this other work equipment is not really specific, so because there are actually several different capital allowance that is available to different work equipment. For instance, if you're using furnitures and fittings, then you have a capital allowance of 20% per year, right? So you are going to be using it for 5 years. Then, but for laptops are charged at the capital allowance of 25%. Right, so the laptops are going to be used for 4 years. So in a nutshell, the capital allowance that's available on laptop is 25%. Then for other work equipment is like furniture and fittings is 20%. Then internet is 25% as well. Then for your power, the power is not really clear. Is it a generator or is it inverter? Inverter system. So if it's generator, then the capital allowance that is given to it is 20%. So I hope this explanation is clear to Mr. Samuel.
Okay, I believe that the one that asked the question has gotten the explanation. However, if you think that you need a clearer explanation to that, you can send us an email after this webinar, and he will be glad to assist you with any other questions that you have. And I believe that that question is also going to provide answers to others who needed to also get that bit of it. Someone is also wants to know, what about business name? Is VAT supposed to be paid to NRS and then personal income tax to LIRS?
Okay, as a business name, you are not mandated to charge VAT, right? But if you do charge VAT, then you are required to remit it to NRS, right? So and it's important that you know that once you've started charging VAT and once you've started remitting VAT, then all the laws that apply to VAT is going to be applicable to you, right? So you have to be doing the filing on monthly basis, and you also have to be making the payments on monthly basis. Any month that you miss out on the payments or on the filing, then the penalty is going to be applicable, charged to you, right? So, but you are not mandated to make the payment or make the filing at the onset. Then for your personal income tax, you have to remit it to LRS. If you are living in Lagos State, then you are to remit it to LRS. Then if you are living in any other states outside Lagos, then it's going to be the tax authority for that state that you're going to remit it to.
Okay, thank you very much. Another question is tax ID different from tax identification number?
In principle, both tax ID and tax identification number is the same thing. The only difference is that tax ID is given by like the State Internal Revenue Services, right? But the tax identification number is given by Joint Tax Board. But in principle, both of them is the same thing. Then when you log into your portal or at the back end, both your tax ID and your TIN is going to be showing at the back end. It's going to be in your portal as part of your information.
Okay. We will be wrapping up on our question and answers. If our audience don't have any further questions to ask, if you do, you can quickly do so and we'll address it quickly. However, if you have any other further questions that you would like to put it through to us after this webinar, you are free to reach out to Famous Advisory anytime, and we will be available to help you. I think today's training has been very, very inspirational and educative. For someone, me, for instance, who is even not in the tax aspect, I can say that the new tax reform is very important, and it's also having a very I should say that it's been very impactful in terms of looking at the impact on individuals as well as companies as well. If you look at the new tax bands, you would realize that it's rather has come to alleviate or reduce the burden on people. So I think this is a very good one for the Nigeria government, and also it is to help and aid and also to make the lives of the people a bit more easier for them to enjoy the economy. Okay, so I have one question I would ask you quickly and we'll bring it to a close. If I have a personal tax ID from the state and my business name has another TIN, which one will I use in filing my individual income tax?
Please, can you take that again?
Okay, so the person is asking that he has a personal tax ID, and then also he has a business name with another TIN.
Mhm.
So which of these should he use in filing for his or her individual income tax?
Okay. In filing the individual tax, then is the personal or the individual tax ID that is supposed to be used in filing the individual tax, right? Because the business name, even though the business name is also taken to be the same person with the owner, but the tax ID that is issued for that in that business name is for a Nigerian Revenue Service, right? So the one that is issued on him or her is the one that is actually his or her own, right? So is the tax ID for the individual is supposed to be used to file the individual tax.
Okay, thank you very much for the explanation. We appreciate. Okay, one very last one. Is it true that foreign companies without any presence in Nigeria need to register for VAT purposes in Nigeria if they sell goods to Nigerian importers? Is it clear?
Well, it depends on the relationship um, the company, the foreign company have. If it's like a one-off relationship in the sense that we just make a sale and also, but you mentioned that they register for VAT. Foreign companies are not supposed to charge VAT at the onset. They're not supposed to charge VAT on, even if they're charging VAT, there's going to be the VAT of the company or the residence of the company. Since it's a foreign company, then the VAT that is going to be applied is the VAT of the residence of the company, right? So they are not required to register for VAT in Nigeria if they sell goods to a Nigerian company. I think that's just a simple answer. They're not required to register for VAT.
Okay, thank you very much for the clarification. We appreciate each and every one who joined this webinar. Your time, your presence means a lot to us. And we have subsequent webinars on other areas of our services coming to you next week and next 2 weeks. We will be sharing same on our website. And I believe that you will still be interested in learning more for your own growth and also for your career growth as well. So if you are here and you're interested in knowing more about our webinar coming up on SEPAC, or in other countries referred to work and residence permits in Nigeria, then join this webinar, which is coming up soon, next week on 5th of March, 4th of March, sorry. And then also, if you are a fashion designer or you know somebody who is into fashion in Nigeria here, but a little small, but wants to be out there, they want to know about what they can do to improve their business as fashion designers, We are also having a webinar in the next 2 weeks to also walk you through what you need to know, the regulatory compliances to enable you become a big fashion designer in Nigeria. So if you know anybody who might be interested in this training, you can share it with them and then they can join us. It is free. FEMOS is dedicated to sharing knowledge with everybody for free. And this year, we are dedicated to doing more of this as part of our way of giving back to the society. So don't miss out on any of our webinars. It will be very, very educative and it will inspire you in your business. Thank you very much for joining us. And don't forget that FEMOS advisory is always available and at your service when it comes to business regulatory compliance in any of the regulatory aspects, when it comes to market research and trade development, tax and accounting services, legal services, and human resource services. We are always available to be at your service. Thank you for joining us today and stay tuned for our other services. You can always reach out to us on email or call any of our officers. We are always ready to provide you with the solutions that you need. At FEMOS, we are always inspired to deliver value. Thank you.
Thank you, everyone, and have a nice day.
At the very beginning, one thing stood out. Information wasn't always easy to find. Reliable data was limited, scattered, and often difficult to trust. FEMOS started as a research company, helping businesses to understand their markets, studying trends, providing clarity through data. Because before decisions are made, they must be understood. Compliance became our foundation, helping businesses operate with a structure, with governance, with confidence, not just to exist, but to operate the right way.
So we expanded into a robust tax and accounting department equipped with integrated solutions to drive growth at every stage of the process.
And so we strengthened our advisory depth with strategic legal services, providing governance frameworks, managing risks, and enhancing long-term value, not just to solve problems, but to prevent them, because strong businesses are built on strong legal foundations.
We saw local and talented founders with bold ideas, but overwhelmed by process. So we built Easy Start to simplify business registration, to remove barriers, and create opportunities.
And that is why we created FEMOS Connect, a career development and recruitment platform which connects talent to real opportunities, where interns find the right roles, where employers discover brilliant minds, where training, coaching, and placement meet purpose, because a thriving future begins with connection.
As our clients expanded beyond Ghana, we expanded with them, establishing our presence in Nigeria and Côte d'Ivoire, strengthening regional reach, delivering advisory across borders, and extending the FEMOS standard to a wider market, because vision does not stop at a boundary.
We've expanded within Ghana with the establishment of Akumase Batch, deepening our national footprints, bringing advisory services closer to businesses, and strengthening our presence where growth is happening.
From insight, we became an organization. From one office, we became many offices. From local impact to regional influence, we didn't just grow, we evolved over time. And with this, we are just getting started.